Good morning, everybody. It's the 1st of August. We are Signal Centre talking ball. I'm Joe, joined by Steve and Jamie. Morning, gents.
Morning.
Good morning.
How you both doing?
Yeah, nice, thanks.
Yeah, all good. All good. Thanks, Joe. How are you?
Yeah, good. Really enjoyed the Lionesses bringing it home last night.
Yeah,
Fantastic.
fantastic.
It was excellent, wasn't it? I thought when it went to extra time, I was a little bit worried. I thought, we're going to penalties and it's all gonna crumble. But they did bring it home. So yeah, it was awesome
Yeah,
to watch.
yeah, fantastic seeing them all at the end and the interviews and everything like that. Just something we've been desperately craving from the men's team for a long time, but never got it. But yesterday was fantastic. So well done to them.
Yeah,
I don't
really
think the
cool.
men's celebrations will be half as good as the women's celebrations
No, you're
either.
probably right.
It was
I'm
like
all
the
for
sweet.
them taking their tops off as well when they score goals. I think well, they should get
That
rewarded for that instead of yellow cards.
could create some memes, I suppose.
Yeah,
But yeah, overall, it's the Sweet Caroline, just like was the piece de résistance.
yeah, very
Yeah,
nice
it's a
indeed.
classic.
Okay, so for anybody that's not from England and not bothered about the Lionesses, we should
You
be
missed out.
first of all. But
You missed
yeah,
out. Yeah.
we'll get on to the latest headlines, shall we? So obviously, first day of a new trading month, first day of the week, and last week we recorded fresh highs for Eurozone inflation. The prices increased to a fresh record high of 8.9% for July from 8.6 previously, which was above the consensus forecast of 8.7%. The GDP data was also stronger than expected, with a flash growth estimate of 0.7% for the second quarter after an upwardly revised 0.6%. The US PCE prices data was stronger than expected as well. The index increased 1% for June with an annual rate of 6.8% from 6.3% previously. The higher than expected reading triggered renewed concerns over inflation trends and reversed the sentiment that had been building after the Fed policy earlier in the week and the weaker than expected GDP data. The US yields failed to hold on to any gains. They briefly dipped on Friday after the US PCE prices data, but there was solid buying on dips and the US yields moved lower again, with the 10-year trading around 3-month lows at 2.67% in early trading this morning. We've seen the dollar correction continue. Again, failed to hold on to any gains after the PCE data. Also a bit of month end influence there as well. So we've seen the dollar dip to a 3-week low and the dollar yen slumped to a 6-week low. So we'll come to the charts on those shortly. There was some subdued Chinese PMI data. The manufacturing index dipped to 49 for July from a previous reading of 50.2, below the consensus forecast of 50.4. So obviously some concerns there with regards to manufacturing. And in the UK, we saw strong consumer credit growth. The UK mortgage approvals declined to 63,700 for June. And there was a stronger than expected increase in consumer credit, which was the strongest increase since May 2019. So some mixed information coming out there. Okay, let's get stuck into some charts. Steve, do you want to kick us off with cryptocurrencies today?
Yeah, sure. I'll dive straight into Bitcoin. As we see, there was another positive week last week, although prices did curtail from the high. We got up to 24,676 and rejected that strong move, forming almost a doji-like candle, but not quite. So still positive. From this corrective bounce that we're getting. It shows a bit more clearly on the daily chart, which I'll dive into, above the 21-day moving average. We're in this nice corrective channel. We did have hit the resistance that seems to have come in around about the 24,300 level. Above that, we have this dip lower, this spike lower that will give us another resistance level about the 25,500 level. For me, the main area of resistance would be up at 28.5 to 29,000. That for me would be the real test of whether Bitcoin has got any more life left in it, or whether this is just a corrective bounce, dead cat bounce, which eventually will move lower. Potentially this flag formation, or no, this is probably from the double top formation. The double top formation looks to target a move to 12,800, and this looks like the flag formation targeting a measured move to around about 10,000. So for me, that's still on the cards, despite this reaction rally we've had. If you look over the last few days, obviously over the weekend, trade's been quite quiet. Shooting star, 3 negative candles, so not looking great. We need to get some life into Bitcoin today, otherwise it could be trouble ahead. Looking at gold, I suppose this is one of the factors maybe affecting Bitcoin is this slightly weaker dollar that we're seeing sort of like come back from the highs, and this leaves gold bouncing nicely, which is priced in dollars. We've got a really nice formation turned around, could call it a morning star formation, really nice strong move higher last week, and the reaction rally from the major support level that we highlighted has been pretty decent indeed, almost $100 rally from there, so that's good. I'll go dive down to the 4-hour chart, which is the formation that we picked up last week. This inverse head and shoulders formation has a measured move target of $1,800, which would be really nice indeed if this plays out. However, we've stalled around about this resistance area that we had as a support area around the 5th and 6th of July. We're capped around about the 1768 level. Break of above there should open up and move to 1786 and potentially 1800 quite quickly. So gold looking pretty strong. Also, we've seen silver push higher, has broken above the previous resistance of 2018, got up to 2037 before pulling back slightly. So it's quite an overextended move. If we break down back below 1985 to $20, then I imagine we're going to get a little bit of a deeper correction before we work out whether we're going to continue higher or not. But I think as well, this is probably a dollar-based reaction again. Let's dive back into crude oil. The weekly chart last week, the week before last, we had this doji candle, and although it almost looks like one of those inverted hammers, which may give us a sign that we're bottoming out. We got the nice follow through last week, but we weren't able to extend too far above the $100 mark before sellers came in again. Trading around 96.70, so expect volatility to continue in crude oil this week. On the daily chart, we've also got this typical inverse head and shoulders formation, broke nicely above the neckline and also above the right shoulder neckline part, but it didn't manage to close above there, and then reacted lower and closed below the sloping down neckline that we've got, and we're also back below the 21-day moving average. So really we need to have a nice strong push above here, otherwise crude oil is going to continue to get peppered by the sellers that are coming in. The quick look at natural gas, which had a great move, and the daily chart, the 26th of July was the pinnacle. It stalled in front of the resistance that we highlighted from the previous upward move and turned around really nicely, forming a shooting star and 2 nice decent negative candles to confirm that. Well, the first one confirms it, the second one is a lovely follow through that we got a little gap on the charts over the weekend, which should probably be expected to be filled, but pretty negative reaction from that resistance level that we've hit in natural gas. The 21-day moving average comes in around about the 715 level. That's it from me.
Lovely, very thorough to start the week. Thank you, Steve. Let's move on to FX, and as usual, starting with the dollar index. So as Steve mentioned, with regards to some of those commodities and also the cryptocurrencies as well, they are being impacted by the move in the dollar index. So we've seen prices rally into the 108.74 resistance. We've then seen a rejection. We've then seen the bullish channel offer some sort of support here. We looked as though we're going to move back to the highs off the back of this candle here from the 26th, but we followed it up with further selling, and since then prices have been moving low. We've seen 4 red candles in a row. Obviously the 4th one hasn't been confirmed because that's today's session and there's a long way to go, but it's challenging this 105.78 level, which is this previous swing high from here, 15th of June. If we get a clean close below that, then that could spark a deeper correction down towards the 38.2% fib level at 101.74. So it certainly looks like we are seeing dollar ready to move to the downside potentially. That could be the start of a larger top pattern. We'll have to wait and see. Overall, across the sort of short to medium, even long-term time frame, still looks pretty bullish overall. So only expecting a minor correction at this stage, and the 38.2 would be quite a nice natural area for that to pull back to in the short to medium term. So what's that done for euro US dollar? Well, as you'd expect, we're seeing that continue to move higher. It hasn't quite reached this important resistance that we've got at 103.48. That's the previous swing lows that we saw here in May and also in June. So we're looking for a retest of those. That will also line up with this downtrend resistance line, as we can see here. So in and around here, expecting prices to get to, and we'll be intrigued to see what sort of reaction we get once there. Will that just provoke the bears to come back in and start selling it lower? Or if we can break above it, will it then spark a decent correction to the upside in Euro USD? Take a look at cable. We saw the break from this wedge pattern last week, and prices have continued to move to the upside, which is quite nice to see. Looks as though we are going to continue heading higher. We saw a pretty large range on Friday, as you can see here, marked by this candle, and pretty much closed where we opened eventually. But it was a pretty large range. In the short term, I'd probably be looking for prices to get somewhere around there, 124.30. Got a bit of a low candle there that hasn't been tested, so a move up to that region can't be ruled out in my opinion. And yeah, it looks to be on the front foot for the time being. If we take a look at some of the other dollar-based currencies, we can see we saw a breakdown in dollar CAD below this support here at 128.19. That could trigger a move lower within this range that's been formed on the daily chart. Lower end of the range comes in at 124.53. If we take a look at dollar Swiss, we can see that's into a really important level of support here. We go back all the way to the left-hand side of the chart back in April 21. These previous highs, they should now act as support, as it has done on this previous occasion here on the 29th of June. So quite an interesting level there. But as you can see, been a really nasty correction in dollar Swiss. So we have to wait and see whether the bulls or the bargain hunters are interested in doing a job around this level here. Dollar yen, quite interesting as well. Obviously, that was pretty much one-way traffic for a very long period of time. But since we've seen the break of trend and a takeout of this low here from the 22nd of July, prices have really started to accelerate to the downside. Really strong dynamic candle on the 28th published. And then we've continued to see prices drop. We've got some support coming in around here at 131.25. So it'll be interesting to see what sort of reaction, if any, we get there. The 38.2% fib level, actually, I've drawn it on from the start of the move higher, which is back in January 2021. So still some distance for that to move to get to that natural correction level, which is at 125.33. So still lots of potential for lower prices on dollar yen as it unwinds some of this monster move that we've seen take place over the last year or year and a half. That'll do on the currencies. Let's move to indices. Let's take a quick look at the ASX 200. As we said last week, that broke through this resistance here and still looks pretty robust and pretty strong. Well, we're flat as things stand at the minute, but we had 3 consecutive strong candles posted last week. So we may see a little bit of a pullback to test. Maybe this is a new support rather than a resistance and continue to move higher. If we take a look at the DAX, again, small bit of weakness this morning, but following the break of this very short-term double bottom, we are fast approaching the measured move target of that at 13,663. I've got the arrow drawn to the top of this large range, which is sort of the, I guess, the ambitious target that we'd be looking for really on that over the short to medium term. Take a look at NASDAQ. So we are struggling to overcome this resistance. This was my gun to the head trade last week, actually. It got on all right to start with, but I was banking on it not getting above this resistance, and it still really hasn't done that. So it was pretty flat on the trade, but wondering whether or not that's still going to do a job. If we can get a breakout above that 12,941, then likelihood is we'll see a continuation higher. S&P 500, that rallied into a decent resistance level. I've got a band of resistance drawn on the chart here. So this is a previous support turned resistance. So we've rallied into that. We've also got a 38.2% fib level of this move here from the highs in March down to the lows in June. Sorry, it's not 38.2 at all. It's a 50%. So we've rallied into that level, and we'll have to wait and see whether or not the bulls have got the appetite to continue driving that higher from here. If they do, then the 61.8% fib level is not too far away. That's at 42.54. I think my preference would be for maybe a bit of a reversal here to retest this support at 39.46. And finally, take a look at the FTSE 100. That's rallied through a 61.8% fib level, just the highs posted here in April, down to the lows here that we posted in June. Didn't really put up much of a fight, so we are now heading towards the 78.6 at 75.24. Overall, pretty range-bound market. It is holding up pretty well, given that it's got a lot of exposure to commodities and dollar. So very much on the front foot and outperforming a lot of its peers still. That's it from me. Jamie, what's going on the stock side?
Thank you, Joe. Yeah, it was a pretty strong end to the week last week for stocks, but before we get to that, we'll look at our biggest gainer and loser of Friday's trading. Our biggest gainer is this, which is BCAC, or Brookline Capital Acquisition, up 125% on Friday. It's a really weird looking chart, and I've tried to find some news about this, but I couldn't actually find anything. So something's going on, something weird. We opened the day at $10. We closed it at $22. Actually got all the way up to $27.70 as well. So a weird looking chart there, but 125% move if you were in on that. So happy days. We've looked at VREX before, but this was actually our biggest loser yesterday coming out of its IPO. It tagged this key level which we had drawn the high of the opening date of the IPO, but the sellers got back involved and sold it right down to $5.45. So that was a 74% move in the wrong direction. Be careful of IPOs, they can do stuff like that. Yeah, not a great one to be in on. Looking at our stock heat map we'll start off with the week. Actually, yeah, let's start off with the week because it's Monday today. As you can see, it was a pretty strong week across the board with a lot of dark green, which indicates that 3+% move to the upside. So Apple, Google, Microsoft, Amazon, Tesla, all making strong moves last week. Meta was down 8%. I think they reported earnings, so that would be off the back of that. And I think all the main red names you see, so there's Intel just lurking down here, down 10%. Qualcomm here, they all had earnings that clearly investors didn't particularly like, so that is the reason why they are all down for the week. If we look at Friday specifically, look at how individual stock performed. Amazon was up 10% just on Friday, and we'll have a look at that chart because they had a really nice gap up from where they were. Tesla again up pretty nicely, and as you can see, pretty strong day. Energy had a really good day with what's the CVX, Exxon, that's COP, ConocoPhillips. It's been a pretty nice Friday that topped off a strong week for stocks. And if we drill into a few of these specifically, you can see Amazon. Look at this, we gapped up on the back of earnings. We reported on the 28th, so that was the Thursday after close, and we opened much higher. And I think we drew on this line of resistance here where it had previously been support. And if we go to where we got to on a 4-hour chart, you can see maybe we draw that after we knew it got there, but we'll just say we were really smart and drew it perfectly. But yeah, a really nice move up, finishing on a doji style candle into the 50% fib. We have discussed this level before, suggesting that this could be a good area for sellers to get back in. Got that confluence of the previous support becoming resistance and the 50% fib level. So let's see if the sellers step in today. Looking at Tesla, this had a really nice little run actually, coming out of this, I guess an ascending triangle type pattern here. You can see the high lows we were putting in. Earnings was the thing that really gave it that boost through. So this was reported on the 20th after close. We had that narrow few days just before earnings came out, as is to be expected quite often, but then Earnings really boosted it up. Had a couple of days of lower volume selling, which you can see here. The volume did drop off before rallying higher to finish the week. So looking at this from a weekly perspective, this has been quite a nice move. Where do sellers get back in? Let's take a fib retracement of this. We're right at the 50% level at the moment from our recent swing high into the recent swing lows. So perhaps sellers will get back in here. If not, we'll be looking at perhaps a 61.8% fib, which comes in here. That also coincides with this little swing high we had here on the way down. So yeah, a really nice end to the week for Tesla. Just want to take a quick look at Moderna. I don't want to spend too long on this, but when I was looking at the charts this morning, I found it interesting, just the real volume drop-off we've had. Obviously, throughout the pandemic, vaccine stocks did very, very well. But if you look at this, you can see on a weekly basis, the volume is really, really coming off this now. We are posting a bit of a flag type pattern, which we identified last week, which I think could probably break up at least to this red line of resistance here. But I just thought that volume was quite interesting on Moderna. Apple,
in general,
again,
I mean, we've seen a bit of a volume boost there, but I think in general the rally that we've seen of late hasn't been overly well supported in volume terms, which is a bit of a concern, I think.
Yeah, I think that's a good point. I mean, you can see just from here, this short-term rally, is this what you're referring to? Just like this bit here, or?
Yeah, I mean, if you look, you can see it sloping off, can't you?
Well, that's the thing. I mean, you look at the left side of just the bit of the chart that I've got open here, and you can see you've got a lot of spikes above the 20-day average on the way down. And this particular rally which you're referring to, it's really clear to see that the volume is coming off it even in the shorter term. So perhaps not a lot behind this. It could be a bit of a rally just before the next leg down, which my bias is for that at the moment. I think there's further down to go. I think we'll see a retest of this 120 level at some point. Maybe it'll get to 188 first. But yeah, I think it's a good point. I mean, even looking at this from a weekly, we're barely getting to the 20-week average the last couple of months. So one to keep an eye on if you're long in Moderna, that perhaps this rally hasn't got enough behind it. Yeah, Apple, similar to Amazon, we had this nice gap up on earnings. We can perhaps take a little dive in to see what earnings we've got this week coming up. But that was been a really nice move from the lows from Apple. Barely any selling coming in really. So that's been looking good. Quick look at AMD. This support level we had here in green held up really nicely, and we're coming back towards this trend line resistance. I'd expect some selling to come in between kind of this resistance we've got, this red downward sloping resistance line, and this previous support level here as well. So that's about $100. The trend line resistance is about 98, so that's where I'd expect sellers to get back in. We'll fly through a couple more of these. Google, really range bound still. Had a really decent week last week though off the back of its earnings result. I'm expecting sellers to try and defend this 119, 120 level again. But let's see what happens there. Twitter, we broke out above these wicks. Volume's still pretty low though, so again, keeping a bit of a close eye on that. Microsoft earnings again. Really interesting chart. We had that gap up off earnings, and it's smashed through two resistance levels we had marked on the chart. So looking pretty strong, and the volume picking up on Microsoft as well. Coinbase at resistance again. I think, you see the volume starting to come off this as well, so perhaps a bit of a sell-off coming start of this week. We'll have to see. I think that's it really. We'll quickly finish on Meta. We noted that was down 8% on the week, and you can see earnings was after close. So while on this day it seemed like there was some optimism going into earnings, it didn't perform quite as it wanted. So we're right at this 61.8% fib level again. We've been here before. Perhaps this is the time we get through, because this looks quite ominous to me. You can see on a weekly basis the volume, these large red bars of volume suggest that institutions are getting out of Meta now. It's had a really, really nice run, but all these kind of big stocks, they do find their end at some point, and perhaps this is at least the end for now for Meta, and it's certainly got a lot of room to go lower. I think the next stop would be this low here, that would be the COVID low actually, about 138. But it's got a long way to fall this, and I think with even on a monthly chart which we're looking at here, you can see the volume is really starting to to pick up on this sell-off. So not looking so good for Meta, but a pretty strong week generally last week for stocks.
Nice one. Thank you, Jamie. Okay, so the next part of our video is to do the Gun to the Head challenge. This is where three of us pick trade ideas live on the video and we publish them directly to our TradingView account. So if anybody wants to check them out, please feel free to do so. The profile is signal_center. In terms of the game itself, we pick these ideas. We must have stops and targets on each of the ideas that we mention, and we must have risk reward ratios in excess of 2-to-1. These ideas are closed at 9 p.m. UK time, or when the stop or the target is hit. So we can keep a decent track of how things go. So in terms of Friday, Jamie went short of Euro US dollar. Quite a bit of engagement on that one as well, Jamie, which was good to see. So please feel free to comment or boost these posts when you see them. Jamie was selling into multiple resistance there on Euro US dollar and was nicely on side come 9 o'clock. I think you were half an hour on side or there or
Sounds about right.
thereabouts.
Yeah.
0.52 R on side. So nicely done. Steve, you were selling Bitcoin and was loads of people throwing abuse at you for that as usual. You were slightly onside as well, 0.04 R onside on Bitcoin. You don't often see such muted moves, but all good really. Didn't lose, so happy days. And I was short of Nasdaq, as we discussed on the daily. Looks as though it's holding around that resistance, which you continue to do, but sadly I was offside 0.22 R on that one. So all in all, pretty good day, pretty low volatility actually, given it was month end. So we'll go again today and hopefully we can pick some decent moves. Anybody fancy going first?
I'm happy to go first. I've got something
Go on
lined up. So I am looking at New Zealand dollar against Japanese yen. I've identified this pretty important looking channel on the 4-hour chart with a well-defined resistance and well-defined support. And nothing too fancy. You can see the RSI is in this oversold area. I'm just going to be buying at the oversold support level. Two factors going my way. You can keep the stop pretty tight. When I first looked at this earlier, the price was slightly close to support, so ideally I'd probably have wanted to buy a little bit lower down here with the stop just under all these wicks, but life isn't ideal. We're going to have to move this up a bit and just hope it doesn't come back and retest this too heavy. So we're going to buy this at current price, which is $83, 83 yen. What are we at? 39, I believe. 83.39. Take profit level will be at 84.54, and our stop will be at just below this wick here at 83.05. So that gives us a nice looking 3.38 R move. Just looking for a bit of a bounce here. I mean, I'm not convinced this rally will hold, but we've had this pretty extensive sell-off, and I think, you know, if we're going to get a bit of a rally, this seems like a decent level to be looking for it. So buying New Zealand dollar against Japanese yen today.
Cool, good luck. Steve, you got one ready?
Yep, I've got one ready. Looking at Bitcoin, as I say, if I'm getting abuse for selling it, I'm going to carry on doing it because there's nothing like getting a reaction rather than not getting any reaction. So I'm not going to be boring. I'm looking at the last 3 days. We've had rejection of this resistance level. Looking at the hourly chart also, there's a very sort of like faint looking head and shoulders formation. So I'm going to go with that. Selling it here, try and line it up. 3-to-1 risk reward on this. Selling Bitcoin at 23,159, targeting a move to 21,359, and the stop is at 23,759. So a nice little 3-to-1 risk reward selling Bitcoin.
Good stuff. Good luck. Okay, I'm going to take a look at DAX today. So looks as though it's broken out of a bit of a range here that it was trading in. Short term trending higher. Over the last hour, we've seen a decent green candle form at this new support, which is around 13,450. So I'm going to buy it at 13,507, targeting a move to 13,699 with a tight stop loss at 13,419. Really struggled today, actually, to find anything I liked, and that was the only one that really stood out. I mean, typically, I'm not overly bullish on indices, given the move that they've had of late, but I'm just going to go with the flow on this one today.
Lovely.
That's it.
Nice. Good luck, Joe.
Okay, data-wise today, we've got a couple of bits out to be aware of. We've got the US ISM Manufacturing Index, which is due out at 3 o'clock UK time. Then overnight, or at 5:30 a.m. UK time tomorrow, we've got the Australian Reserve Bank policy decision. They are expected to raise interest rates, although more gradually than what we're seeing elsewhere in the world at the moment. And then throughout the rest of the week, we've got the Bank of England policy decision on the 4th. We've got non-farm payrolls on Friday, as well as Canadian jobs number as well. So plenty to keep us interested this week. Anything else to add, gentlemen?
No, all good.
All
Lovely. Well, hopefully that's helped kickstart your trading week. If you're watching, we'll be back tomorrow. And until then, everybody, please trade safe. Have a great day.
Cheers.
Bye-bye.